Hello everyone, welcome to another video for CFA Level 1. In today's video, we will be doing a fresh topic in the reading that we were doing in economics, that is capital flow and FX market. The topic that we will be discussing today is balance of payment. Again, balance of payment is a standalone concept. So even if you have not done the previous class, which was the introduction, you will not have a lot of difficulty in understanding and grasping this concept. Okay. So let us directly start into the concept. Okay. See, suppose we have a country A. Okay. Suppose we have country A and then we have the international market. Okay. Now international market will comprise of all other countries. Yes. Now that can be government plus it can be private players. Correct. Now if you will see is that with the current era in which we are in, okay, every country engages into trade with every other country. Okay. What is a trade? Trade is simple buying and selling. Okay. So if we are taking the example of country A will be engaged in the activity of buying slash selling goods and services. Okay. For which it will be receiving and paying money. Correct. For which it will be paying and receiving money. Number one. Second, it will also be engaged in making and receiving investments. So, making and receiving investments. Correct. So, a country interacts with all other countries in the world by two major ways. Either they are engaged in the activity of buying and selling of goods and services. In case of buying and selling, they will have to constantly make payment as well as receive the payment. Second, they are also engaged in making the investment as well as receiving investment from other country. When we talk about investments, okay, investments can be of two types. One is financial investment. What is financial investment? Financial investment means investing in stock market as an example, or making direct investments, for example infrastructural investment or building capital assets. Correct. So till now what we have established that every country trade with every country interact with every other country. Either they will be engaged in trading of goods and services, that is buying and selling of goods and services, for which they will give and receive money. Second, they will also engage in investment activity. Investment activity can be financial investment or it can be direct investment. Okay. So all in all, can we say every country can we say that every country interacts with other countries in three ways. First, buying and selling goods and services. Second, financial investment. And third, capital or direct investment. Correct? If you look it from a perspective, these are the three possible ways in which a country interact with each other. Right? Now, this can be between government, or it can be between private players, or it can be between a government and a private player. Correct? So over here, we are not necessarily saying that it will occur between the government of the countries, or neither we are saying it will occur between the private players of the country. We are saying any permutation or combination is possible, either between the government, or between the private players, or between the government and the private player. Okay, correct. And these are the three possible ways of interaction. A system which keeps a track, a system which keeps a track of all this activity. So basically, is needed. Correct? See, the amount of goods that we have purchased, the amount of services we have purchased, the amount of goods we have sold, the amount of investments we have made. It is important to have a proper record of that with us, right? Don't you think it is important? Guys, don't you think it is important for us to know that how much of trading activity we are doing, how much of investments we are doing? Guys, yes or no? Definitely that record is important. That record of above activity is known as balance of payment. So balance of payment is nothing. It is a record. Okay, balance of payment is nothing. It is a record. What record it is? It is a simple record of the transactions that you have with other countries. Simple as that. It is a record of the transactions that you keep or you do with the other countries. Guys, are we clear? Guys, is this simple thing clear to us? That this is a record. Now let us go and study what is written over here. Balance of payment is a record of all economic transactions between a country and the rest of the world over a specific time period. Guys, this is what we have seen. Whenever a country is engaging into transaction with the other country, the record of it is the balance of payment. It includes the value of exports, imports, and other transactions. What is export and import? Export or import is nothing but trading. Trading. And what is other transaction? Other activities are majorly investments. So guys, there are basically two kinds of transaction, trading or investment. So export and import is trading and other activities are investments. Okay. But see, a country's balance of payment is not something that you can simply write it on a piece of paper or a piece of book or maintain a record, because those transactions runs in lakhs and lakhs of line items, lakhs and lakhs of data, right? So you need a proper system of organizing those data. Okay, you need a proper system of organizing. Why? Because a lot of economic policy decisions are taken basis those data, and that is why it is very vital that this data is properly classified, organized, and maintained. And in order to properly maintain this data and to draw some insights, we break this balance of payment record into three accounts. Okay, current account, capital account, financial account. Current account, capital account, financial account. So basically what it is saying, any transaction on balance of payment, any transaction on balance of payment, either it will be classified under capital account or it will be classified under current account or it will be classified under financial account. Now guys, see one thing. Can you see one similarity over here? We had three types of transaction. Over here we have three types of account. Can you see a similarity? Why do we have three types of account and why do we have three types of transaction? So basically, this account are clubbed basis the similarity of the transaction. So transactions of similar nature are clubbed under one account. Guys, are we getting it? So transactions of similar nature clubbed under one account. Now we will see which type of transaction is clubbed under which account. Okay. Current account, it measures the flow of goods and services. Guys, current account measures the flow of goods and services. It comprises of merchandise and services, income receipts and unilateral transfers. So basically it comprises of buying and selling goods and services. Guys, second, capital account, capital transfers and acquisition and disposal of non-produced, non-financial assets. So what it is basically the direct investment we were talking about, like the land or the infrastructure or anything. It comprises of capital transfer, sale or purchase of non-financial asset. What is a financial asset? What is a financial asset, guys? Financial assets are like shares, bonds, stocks. These are financial assets. On the other hand, what are non-financial assets? Building, land. These are non-financial assets. Okay. Now we are left with financial account. What is financial account? It records investment flows. What is investment? Government owned assets abroad, foreign assets owned in the country. So basically, three account, three types of transaction and similar transaction clubbed into one account, so that the policy making, so that the decision making can be taken easily. Guys, are we clear? Are we clear with the concept of balance of payment, and are we clear as to why different kinds of accounts are even needed, why they exist? Now guys, this is a very common CFA question. They will give you 2-3 transactions and they will then ask you to identify whether these transactions fall under capital account, current account or financial account. Okay, so they will give you three transactions, for example, A, B, C, and then they will give you four options, like the first one is capital account, second one is current account, third one is financial account. Second option, financial, current, financial. Third option, financial, financial, current. Fourth option, financial, current, current. So they will give you 2-3 transactions and then they will give you permutation combinations of what account it belongs to. That is one of the very favorite questions for CFA. So guys, it is very important that we understand which kind of account caters to which kind of transaction. And I hope with the example that we have taken, it is clear to you guys.